So we've done a lecture on education. We've done a lecture on the criminal justice system. Next, we're going to talk about economics. Economics is a huge portion of debate. Economics motions happen all the time, and you should expect an economics motion in almost every debate tournament that you could ever attend. The way that we're going to approach this economics lecture about debate is I'm going to explain to you all of the really important terms that you need to understand, and then maybe at the end we'll talk about how those terms fall into debate. So a lot of this might be review for you, or all of this might be new, but we're just going to talk about economics broadly. To start talking about economics, I want to talk about supply and demand. What is supply and demand, and how does it work? So supply is anything that is up for sale, the amount of anything that is up for sale. And demand is the amount of people who want that thing and how much they want it. And very often, supply and demand balance each other out, and they determine the price of things. For example, there is no market, there is no supply of laser guns because they don't exist. Wait, are there laser guns? Okay, we're talking about Star Wars laser guns. There's no supply of Star Wars laser guns. Also, there is no market for smelly socks because nobody wants them. So, no supply for laser guns and no demand for smelly socks. Of course, if somebody made a laser gun, the supply would go up and there would be one laser gun in the world, and then everyone would want that laser gun. So let's talk about other things. Let's talk about the supply and demand of bananas, okay? So if there was a sudden typhoon and half of the bananas disappeared, then the supply of the bananas would go down by half, but it wouldn't change the demand so much. Therefore, the price of the bananas would go up. And then whatever bananas were left behind, people would have to pay more for those bananas. Or if some reason everybody really started to want bananas, then the demand for bananas would go up, and then again the price would go up. So if the supply goes down, the price goes up. If the supply goes up, the price goes down. And if the demand goes up, then the price goes up. And if the demand goes down, the price goes down. And this balancing of supply and demand is what causes the price of all goods in the world. Therefore, if there's very few of something, the price is always going to go up. And if there's way too much of something, the price is always going to go down. This applies to a lot of debate motions where you're legalizing the sale of something. So if the government legalizes something, the supply of it will go up because people can produce it legally. Therefore, the price of it would go down. A very good example was Prohibition in the United States. Prohibition was when the United States banned the sale of alcohol. And during that, the sale of alcohol, the price of alcohol shot up. But after Prohibition was over and alcohol was legal again, then the price of alcohol went down, and so now you have the market that you have today. And supply and demand goes into most debate motions. You could have debate motions about housing and the fact that you need more supply of housing so that housing can become cheaper. Supply and demand also affects something called inflation. And inflation occurs when the supply of money raises in relation to the supply of products. So the supply of money in most countries is going up every year because governments around the world can print more money and put more money into circulation. Usually, most governments target a 2% inflation rate around the world. So the Federal Reserve of the United States, the Federal Reserve which controls the currency of the United States, they target a 2% inflation. So basically, if there is 2% inflation, that means your money next year would be worth around 2% less and be able to buy 2% less products. The word for when inflation goes too fast, too high, is hyperinflation. Basically, when inflation is above 2% and at 5%, 10%, 50%, that is called hyperinflation. And hyperinflation is terrible for your economy because the money supply and the value of people's money starts to plummet. A very good example of hyperinflation is the country of Venezuela that has been suffering from hyperinflation for decades. The opposite of inflation is deflation, where the money or the value of the money goes up and the value of products in relation to the money goes down. One fun fact is that we want inflation in most countries, not a lot of inflation, but a little bit of inflation, so that people are incentivized, people want to buy things now instead of later. Because if people stop buying things within the economy will slow down and there will be less businesses able to sell their products. And I talked a little bit about central banks, but what is a central bank? A central bank is an institution that is a part of the government that controls the supply of money. They control interest rates, they control the printing of money, and they control, in a sense, the inflation that occurs. The strongest central bank in the world is the Federal Reserve of the United States. Some people call the Federal Reserve the Fed, by the way, and they control the monetary policy, the interest rates, and the printing of money in America. The reason why the Federal Reserve is so important in economics and in economics debates is because the US dollar is the most heavily used reserve currency around the world. I think the last time I saw the statistics on it was that 58% of all reserve currencies around the world are in the US dollar. The reason why a lot of countries around the world hold these currencies, and there are around 7 hard currencies that are held as reserve currencies around the world, is because these currencies are usually quite stable and they hold their value, and therefore they're very useful for 1, saving money, but 2, for using for trade.
Why would the US dollar but not other currency?
This thing called the Bretton Woods Conference after the end of World War II, where they pegged the US dollar to gold, and then they made it so that every other currency could be exchanged to the US dollar, and therefore it incentivized everyone to trade in the US dollar, and therefore it became the reserve currency. And what is a reserve currency? A reserve currency is a foreign currency that is held in significant quantities by the government. So if the government of Vietnam was holding a bunch of US dollars, that would be a reserve currency that they are holding. The 2 most held reserve currencies around the world, as I said, is the US dollar around 58%, and then the euro, which is around 20%. Usually money around the world is printed digitally and not physically, but all physically printed money is printed through something called the mint. And the mint, they actually print the money that we use, the cash that we use. By the way, the vast majority of money in the world right now, more than 90%, I think 97%, is digital money, not real money. Next, let's talk about taxes. Taxes are a compulsory charge imposed upon taxpayers by the government. Sometimes the regional government, the state, provincial government, or the federal government. We all don't like taxes, but taxes exist for 3 reasons. 1 is so that they can fund projects and programs that the government has. 2 is to redistribute wealth so that there is not too much wealth disparity. And then 3, it's to discourage certain actions. This is called a sin tax. But why are governments allowed to take our money? It's my money, I earned it, right? Well, there are a few reasons. One is because we live in a society where the government gives us the tools to be able to flourish. They build the roads, they give us hospitals, they give us education. So whatever the government sort of pays for with our collective taxes, we benefit from those taxes, and then we use those benefits to be able to earn money. Therefore, we principally owe the government taxes. But 2 is because the government protects us and maintains our safety. Yes, it is a form of benefit, but in a way, it's a different allocation of taxes. This goes to the military, this goes to the police, and other forces that keep us safe. And then 3, because we are citizens of that country, and therefore, as we are citizens, we should ethically want to help and provide for the other citizens that live in our country. And citizenship also infers on us other rights, such as the right to vote, which we are also buying with our taxes. So yeah, we pay taxes because we benefit from the government, because we are kept safe by the government, and because we are given rights such as voting, and because we are citizens of that country. There are many forms of taxes, and I'm not going to talk about all of the different types of taxes, but let's go through a few really important ones. So first one is the individual income tax. And the individual income tax is levied upon the money that an individual or household earns in a given year. And they must pay this to the government every year from the income that they earn. In most countries, the income tax of the country is progressive. So therefore, the less money you earn, the less percentage of that money you have to pay to the government. But the higher percentage of income that you earn, the more percentage of taxes you must pay. Next is the corporate income tax. And the corporate income tax is a tax paid by corporations and businesses to the government. Corporate income tax is calculated after you deduct the expenses of that company, and therefore you only tax the profits that that company makes. So for example, this is probably why Netflix for many years paid 0 corporate tax, because they didn't make a profit. In most countries, the corporate income tax is lower than the individual income tax. And therefore, this is very helpful to people who own businesses and small businesses, since they can pay less taxes in a way. Corporate income taxes are different all around the world. Most recently, the corporate income tax in America went from 30% to 21% during the Donald Trump years, when Donald Trump lowered the corporate income tax from 30 to 21. The next tax that's important to know about is capital gains tax. And capital gains tax is a tax levied on the profits you make when you sell an asset. And an asset could be a painting, it could be stocks, it could be a rare car, it could be a super rare baseball card. A capital gains tax is basically any tax that you pay upon selling something that appreciated in value. So for example, if I have a super ultra rare Charizard card and I sold the Charizard card for $100,000, then the profit that I made on that card, I would pay a capital gains tax to the government. However, capital gains tax in most countries is not paid until you sell that asset. So for example, if Jeff Bezos owns a lot of Amazon stock, but he doesn't sell the Amazon stock, you cannot tax the stock that he has. And the act of selling the stock and gaining the profit is called realizing the profit, or realizing a capital gain. I'm just gonna read this part, yeah. So we can just like put the thing up. Next type of tax is called a tariff. A tariff is a tax that one government levies on products coming into their country. So for example, recently, Joe Biden levied a tariff against Chinese electric vehicles. And so any Chinese electric vehicle that is shipped into the United States and sold into the United States is levied a 100% tariff. Sometimes tariffs are put in place so that they can get rid of products that they don't want coming into that country. So for example, Canada levies a tariff against milk and beef that comes from the United States because Canada and the United States have different regulations in terms of the production of beef and milk. And therefore, the Canadian government wants to protect their Canadian dairy farmers, but also sort of stop Canadian people from purchasing products that they deem less safe. The last reason why you impose tariffs is so that you can protect your homegrown industries. So the tariff that Joe Biden put against electronic vehicles from coming from China, that tariff stops the companies in America from losing profits and from going under in business. Next, let's talk about economic systems. So there are multiple different types of economic systems, but it can be simplified by saying there are capitalist leaning systems and socialist leaning systems. So capitalist systems have a lot less taxes, a lot less regulations, and more of a free market where people can sell and buy goods on the market and determine their own prices. And socialist leaning economies have more taxes, have more redistribution, have more government, and have less free flow of goods in the capital markets. So there are capitalist leaning economic systems and socialist leaning economic systems. And so there is this spectrum that goes between these two systems. So all the way on the capitalist type of economic system are countries such as the United States and Japan, and all the way past socialist, all the way into the communist type of systems is countries like North Korea. But in the middle between those two sort of ends, there are many different countries, such as maybe China would be sort of a little bit more on the socialist side, Venezuela is even more on the socialist side, a country that is more on the capitalist side is maybe France or Belgium. So yes, there's this large spectrum between capitalist economic systems and socialist economic systems, and a lot of countries fall within these two economic models. So again, socialist leaning economies have more taxes on corporations and individuals and more regulations usually, and capitalist leaning economic systems have usually less taxes on corporations and individuals and a little bit more freedom in the capital markets. Yes, so a majority of OECD countries are very mixed in their economies, where they allow freedom within the economy for goods and services to be sold, for supply and demand to level out, but also they have taxes to be able to redistribute goods and currency to people. So when it comes to running the economy of the country through the government, there are two types of policy: monetary policy and fiscal policy. And monetary policy refers to actions central banks take to pursue objectives such as price stability and maximum employment. And fiscal policy refers to the government's revenue collection and spending decisions. So basically, monetary policy has to do with stabilizing currency, and fiscal policy has to do with how money is spent in the government and by the government. Something that you really have to know if you're a debater is the term GDP. GDP stands for Gross Domestic Product, and Gross Domestic Product is the final value of all the services and products sold within a certain allotted time, usually a year. So usually they'll say GDP per year. GDP per capita is the amount of value created per person in the country. And so this gives us a sense of how much wealth there is in a country per person in the economy. The reason why GDP is very important is the GDP figure of every country gives us a sense of how big that economy is compared to the economies of other countries around the world. So the two countries with the highest GDPs around the world are the United States and China, and the United States being the highest GDP in the world. So yeah, that was a lot of jargon about economics, and I hope that these principles and these ideas really help you understand what economics is on a basic level. In economics debates, you have to talk a lot about the health of the economy and how the economy changes or impacts the people in that economy. Economics is not just about talking about how much money there is in an economy, it's about talking about how money affects people and how taxes affect people and government policy affects people and how economic, fiscal, and monetary policy affects people. So if you're gonna talk about economics and try to win an economics debate, you always have to link how the economy is doing to how people are doing. Because the economy of a country, the point of the economy is not just to grow, it's to help the people that live in that country. So I hope you remember a lot of these terms about GDP, supply and demand, about central banks, reserve currencies, all of this. These are words that you are going to use in the economics debates that you do. These are words that you're going to use for the rest of your life. So I hope you remember them, and I hope that you have a better understanding of economics as a whole.